morning, everybody. Thank you for joining us for BS Bagels. And, you know, everyone's probably wondering what the BS stands for.
I was.
It's actually Building Solutions for Community Associations. But if you want to do a little BSing, I'm okay with that too.
So we can BS about building solutions?
Yes.
Okay, that works.
So I'd like to welcome Dave with Expert Inspectors today. He's our guest, and we're going to be talking about replacement cost valuations, reserve studies, and how that ties into maintenance, repair, replacements. And the reason why we thought that this was a good conversation piece today is there's been lots of rains, we're in hurricane season, we're in storm season. And with that, we lead to a lot of leaking issues, a lot of issues with your condominium buildings and your common areas of the associations. A majority of the calls that we've received over the last month have been, hey, we've had leaks from up above. Who's responsible for them? Where do we get the money to fix them? How does insurance tie into it? So therefore, we thought that this was a good conversation piece. We welcome board members, community association managers, members to ask us questions, to network with one another during this forum. And this is something that we're going to have every month to talk about hot topics and build solutions for community associations. So with that, I wanted to take a question up front just to see, you know, if somebody has a question to start this discussion with regards to maintenance, repair, and replacement issues. Anybody have a question? No questions. So with that, Dave, have you ever lived in an association?
I have, and I do. Actually, I live in an HOA now. I've lived in condominiums a couple times over the years.
And did you ever have an issue where you had a leak and then went to the association and said, what the heck, I'm not paying for this. Who pays for this?
I think everyone who's lived in condominium associations, especially the tower associations, have had that issue. If they haven't had it, they will.
They will. And what do you think? Who is responsible when a unit is damaged at no fault of theirs, or at least they don't think it's at any of their fault? Who is responsible for the maintenance and repair?
Well, you know, and quite honestly, I always tell people to let the insurance companies decide that.
Okay.
You know, it's one of the things I've done is I've been involved in insurance claims for almost 20 years now, and as an adjuster, it's hard to tell who is responsible for whatever. You know, I always say try to file a claim with your own company, and then let them fight out with with the other companies and see.
So that gets into an interesting topic area, because whenever there is damage or there is a leak or there is an instance where something has to be maintained, repaired, or replaced at a condominium association or a common element at a homeowners association, it's always not an insurable event. An insurable event is just that, an event that is a casualty, flood, fire, hurricane, or a sudden bursting pipe that causes damage. So oftentimes the issues that we see when it comes to us, to the law firm, is an event that's due to wear and tear, negligent maintenance, someone possibly leaving their water faucet on or their shower on, going on vacation and it floods, having bad windows, sliders with the sideway rains, and in that instance, you couldn't make an insurance claim. Your insurer would deny that claim. So that's actually the first thing that you have to identify when you're having an issue and something has to be maintained, repaired, or replaced. You have to first determine what is the cause. Not only what is the cause, but is the cause actually an insurable event, or is it something that is caused due to wear and tear or those other various issues that we discussed?
Yeah, exactly. And I'm sorry, I misunderstood the question. I thought that you were talking about something like was deemed from a leak from a storm or something like
Got
that.
it.
But yeah, definitely. That's your insurance carrier is definitely going to turn down a claim like that if it's from lack of maintenance, if it's wear and tear on a pipe, or even on a roof coverings. That's not maintained properly, if it's not cannot be attributed to a specific event, storm or anything like that, the insurance carrier is definitely not going to pay on it.
No. So, as I stated, and you can kind of take notes, anyone that's listening to this, you have a situation, you're a manager or you sit on the board, first question to ask is, what caused the damage and what necessitates the repair and replacements? Then you go to your statute, which is 718 for condominiums and 720 for homeowners associations. And the Condominium Act is very sort of specific about what the condominium insures, what the unit owners insures, what is a casualty, what is an event that's insurable. And once you determine if it's a casualty, then yes, the association is responsible for essentially the condominium property, everything outside of the unit, drywall out. And then the unit owner is responsible for everything, I like to say, paint in.
Right.
And if it's a casualty event, the condominium association must make a claim for any condominium property that is affected, and they do have to insure the entire condominium property. But let's say there's an event that affects the walls. They have to go in and do dry out. They have to sort of take the walls apart. Then the owner's going to be responsible for paint out. They're going to have to repaint their wall. If there was wallpaper, replace the wallpaper, replace their cabinets, and that's why it's important for homeowners, especially in a condominium, to also carry their own insurance. Oftentimes, people have this false illusion that if you live in a condominium, because the association has insurance for the entire condominium property, they don't have to carry insurance. And the statute does not require it, but they should have it.
Yeah, and it's real simple for the 718 specifies that the unit owner is responsible for anything as far as internal furnishings. So basically any finishes on the ceiling, any finishes on the floors, the walls, cabinetry, anything, obviously contents, is all covered by the individual unit owner. And actually, there are charts that are available that that we can give to the associations that actually break that down. It should be on any of the replacement cost valuation reports. That no matter who does it for you, that should be part of the report that tells who's responsible for what. As opposed to, for example, flood insurance. For flood insurance, the association has a flood policy. The flood policy covers everything. It covers everything except for the contents. So the ceiling treatments, wall treatments, interior floor treatments is all covered in the master flood policy for the association.
So therefore, it is very important for us. So many of our associations don't have flood policies. It's a little crazy. Unless they're required to have the flood policies, they don't have them, where we advise all associations, not just the ones that are in the flood zones and required to have the flood policies. They should have it. There's an advantage to it, and they're not that expensive.
They're cheap. And people don't realize that on major events like hurricanes, usually 25 to 30% of the damage are in areas that are not in flood zones. I run into associations on a weekly basis and say we don't have flood insurance because we're not in a flood zone, it's not required. But across the street, it is a flood zone. And it's like, I don't understand that rationale. The water doesn't stop in the middle of the street because it says it's not in a flood zone. The water is going to continue, and they're going to have issues. And if they don't have flood insurance, your wind policy, your hazard policy is not going to cover it.
Now, Dave, I know we're going kind of a little bit not off topic, but can you explain to our viewers exactly what you and your company does?
Sure. Expert Inspectors has been in business since 2002. We cater to homeowners, associations, condominium associations, co-ops throughout Florida. We cover all 67 counties.
Timeshare condos.
Timeshare. And up until a few years ago, that was just a condominium. And that of course, they broke it off now. And I'm honestly still not sure exactly where that break is. Because a lot of those timeshares are still governed under 718.
They're governed under 718, and a lot of the meat and potatoes of developing a timeshare is under 721.
Yeah, it's crazy. When someone figures it out until I ask you, please tell me the difference. But anyway, But our company does reserve studies, which coming into budgeting season now for 2021 is extremely important. We've gotten a lot of questions. We do replacement cost valuations, what people used to call insurance appraisals, for associations, both COAs and HOAs. And we also do windstorm mitigation inspections. We usually do the windstorm mitigation inspections as a complement to the replacement valuations. While we're out there, we do the windstorm mitigations also.
Can you explain the difference between, let's start with replacement cost valuations, then talk about the windstorm mitigation, and the necessity for the replacement cost valuations, and then how both of those tie into the reserve study?
Sure. The replacement cost valuation is it's an insurance appraisal. It's how much you should insure the association for if it were totally destroyed. The background of that is after the 2004-2005 hurricane season in Florida, we had in 2 years we had some major hurricanes in Florida. Tallahassee saw that so many of the associations were underinsured, and the unit owners were paying the price for it.
What does that mean? Because we say those things a lot, and this is sort of the importance of this forum, is we can kind of break down and BS with one another with regards to underfunded. So you utilize that term. I want to make sure all of our viewers actually understand what that means. What does it mean to be underinsured or
underinsured?
Sure.
Yeah. Underinsured, example, if it costs $1 million, arbitrary number, to replace your association.
And what does that mean to replace your association?
Well, that's if it were totally destroyed, to rebuild it. That means to take to clear the debris from the area, to start the construction from the ground up and to reconstruct. So it's not just the cost of new construction, it's also to clear the debris that's already there and completely rebuild.
So that looks different for a condominium versus an HOA.
It should be. Yeah, with a condominium, condominiums under 718 have got to have the replacement cost valuation done every 36 months. It's a state statute. It has to be done. If not, they're violating Florida law.
Right.
HOAs, it's suggested that they have the replacement valuation done, but it's not required by statute.
And it makes sense why. It's going to cost a lot more money to replace a condominium than it would be an HOA, because in the HOA, most people own their residence. Mm-hmm. They're going to have their insurance to replace their home. In an HOA scenario, it's going to be the amenities, the common elements, streets, roads, clubhouse. You would imagine that the stormwater drainage and all of that wouldn't be destroyed, but could be destroyed. So the cost of truly replacing the common elements of an HOA, in my view, would be a lot less expensive than putting together an entire condominium.
Yeah, and it's not as economically challenging to the individual. For example, I mean, if the clubhouse were destroyed and the pool, well, I'm sorry they don't have use of, but it's not going to hurt their living area.
Their habitability,
exactly,
that's correct.
Exactly. And there are a lot of gray areas there too. I'm sure that our viewers and you and I have seen a lot of associations that are set up as HOAs, which really should have been set up as COAs.
Yes.
Because they're especially townhomes with multi residences.
Yep.
And then you have 6 or 7 residences in one building. They all butt each other. They're all attached, but they're HOAs, and they're trying to figure out who's responsible for ensuring the roof and the exterior walls is very difficult.
We have a lot of those scenarios. Okay, so going back to it, so the condominium requires every 3 years to have this replacement cost valuation, which is an insurance appraisal. So what do you go out and do?
Basically, we go out and look at the type of construction it is, whether it's joisted masonry. Joisted masonry would be, for example, if it has concrete walls and wooden joisted roofs, or if it's all concrete, like a lot of the tower condominiums along the beach are all concrete. They're concrete roofs, concrete walls, and determine what it would cost to actually replace that. And we look at the replacement costs. We take into consideration that does it have fire suppression, does it have sprinkler systems, does it have elevators. all the components it would take to actually rebuild it. But again, one of the important things is we actually have to figure out what the cost would be to clear the debris from it and then rebuild it. So I mean, what a lot of folks don't understand is when they sign their policies, when you renew your policy, and there's a lot of policies that are coming up for renewal in November, December. It's the height of the years for it. You're telling the insurance company when you sign it as the president of the association or a board member that you're insuring it to the correct replacement value. It's not up to the insurance company to determine what the correct replacement value is. It's up to the individual association to determine that. And that's why they should hire someone like myself who has experience and knows how to put the value on it.
Now, does the insurance company then look at your insurance appraisal? They rely on your insurance appraisal, but they don't have anybody at their own company coming and then verifying what you're stating?
They don't. We get phone calls all the time from insurance agents and insurance carriers with specific questions about it. I had one last night, right as I was leaving the office, from an insurance agent who my evaluation was so much different from what he was looking at because he did his own quick view of it and tried to determine what it would cost to replace it, so you give him a quote. And quite honestly, he was at $6 million and I was at $9 million.
Wow.
It was a huge difference. So we went by line item, things, and again, he's an agent, he's not a valuation specialist. And as he was, I said, well, fire suppression, did you get that? And he said, well, no, I didn't. I said, how about elevators? And it's like, no. I said, well, they've got 5 elevators. So by the time we added up, he said, all right, we're now, instead of $3 million apart, we're less than $150,000 apart. He says, all right, I apologize. I know now why we hire people like you to do this.
So this insurance agent had basically had conversations with the association, was like, hey, you'd be fine at being insured at $6 million. Mm-hmm. And had they not hired you, that would have been the scenario where they would have been underinsured.
Right.
And if they did have a massive casualty, as we have had in Florida, they wouldn't have had the requisite funds to replace what they needed to replace at the property.
Well, and even not a major disaster, because when you tell a association that this is how much it costs to replace my condominium, and you sign on the dotted line, they have an option to, it's called an insured to value clause in the policy. So if you're actually only insured for example, let's say you have a claim for $500,000,
Mm-hmm.
okay, major event but not catastrophic, and they go out and they find out you're actually 70% insured, you're 30% lacking. Under the insured value clause, they can actually take that 30% off the claim because you're 30% underinsured.
Wow. So you could really end up not having, they would take 30% off of the $6 million.
Right.
Wow.
Yeah. Well,
now, do the agents actually tell, because so many of my associations do not get the replacement cost valuations pursuant to the statute. Many don't get them every 36 months. Does their agent tell them, listen, we're getting ready to renew, you might need to get a replacement cost valuation, or are they not required to do that? Many don't.
Well, they're not required to. The good ones do. Because they have their client's best interest at heart. They want to make sure they're properly insured. And it's interesting the way the statute is written. Not only is the insurance company, the insurance carrier, the insurance agent not required to, legally the CAM is not required to. It's up to the board members to, the board to actually have the replacement cost valuation done every year, or every 3 years.
How much does that cost?
It depends on the association. I mean,
what's the range?
Low end, $400 or $500. High end, we've done associations with over 100 individual buildings in them before, which are thousands of dollars. But versus the amount of money that you could lose if you have a major claim, it's minimal. Also, what a lot of people don't realize is that this is a statute. It's not a suggestion. It's not.
It's a law.
It's a law, and the state can actually implement up to a $5,000 fine on the association if they don't have it done.
And they do fine.
They
I
do.
mean, it now immediately goes to a fine.
Yeah,
And in fact, they should fine because, you know, this is the unfortunate thing that if the CAMs aren't telling the board and if the insurance agents aren't telling the board, the lawyers, I mean, they don't come and ask us that question until the event has occurred, and you have what I call lay people, people that don't really have the requisite knowledge or experience to make these decisions. Their job really is to hire the proper experts, have a good accountant, have a good insurance broker, have a good company like yours to do the evaluations.
And a great lawyer.
And rely on the reports. And many times it's just by sheer negligence that the boards aren't doing what they're supposed to do because they're not sitting at home and reading these statutes. And really shouldn't be interpreting the statutes because that's the unlicensed practice of law. So it really is something that falls through the cracks.
Yeah, and that gets back to another subject you and I talked about before this started was board certification. So many board members take their positions without even any board certification classes, which is crazy. I'm sorry to you, but it is. For anyone to take on the responsibility of a multi-million-dollar association, and quite honestly, this is what associations are. They're corporations. They're multi-million-dollar corporations and have no knowledge of what they are legally responsible to do.
And nor want to hire the experts to help assist them. They hesitate from asking questions because they don't want to spend the money. They don't budget for us to do the work because they want to keep their assessments low, and it becomes a vicious cycle.
Right.
So that's what we're hoping that this forum does, is really help educate, open the eyes of the board members and managers about some of these very important pitfalls. And, you know, the reason why we're focusing on this right now, we're in rainy season, leaks are happening, we're at that November, December time period when you're having to renew your insurances, so it's a good right time to get your replacement cost valuations, and we're also going into budget season. You should be budgeting the cost for your replacement cost valuations, your reserve studies, your legal, your accounting. Then you have the money to do it and you're not grappling. And I really think it is the board's duty to properly budget for these things that they have to do.
Oh,
you could even reserve fund for your cost replacement valuation. There's no excuse not to have it done. And if it's on your budget, you're never going to forget.
Mm-hmm. And a lot of associations do that. You know, one of the things that we do that a lot of replacement cost valuation companies don't do is at 34 months, so basically 2 months before the anniversary date is up, we notify the association that they're due. We give them enough notice that they can, if they need board approval for the expenditure of the money, they can do it. So they have 2 more board meetings before the 36 months is up.
And when should they hire you? So say the renewal is December 15th. They should be looking to obtain the cost, hire you or a company similar to yours in November. How long does it take to turn this around?
Well, the report only takes about a week to turn around. We got a very fast turnaround rate. I've got a great staff that produces the reports quickly. Usually it's about 5 to 7 business days to get the report turned back around. But the insurance agents usually like to have it about 60 days before the renewal.
Wow.
Well, the reason for that is that way they can take a look at it, they can shop it to get the association's the best rate.
Okay, that makes sense.
Yeah. And also what we do is, we were talking about windstorm mitigation inspections. Windstorm mitigation inspection is what the boards can have done in order to get a discount on the windstorm policy. And the nice thing about that is they can also share that same report with all their unit owners. So the unit owners can use that same report to save on their individual unit policies also.
And is that something that needs to be done yearly or in conjunction with the replacement cost valuation?
The replacement cost valuation is going to be done, as we said, every 36 months. The windstorm mitigation policy inspection is going to be done every 5 years, every 60 months. So what we do is, as we go out every 3 years.
But not required in the statute.
It's not required by statute. But if you wait beyond the 5 years, you lose the discount off it.
Got it. So in order to obtain the windstorm discount,
right,
you have to have it done every 5 years, whereby not only can the association benefit from the discount, but each individual owner can benefit from it. What is it exactly?
Well, the windstorm mitigation is, quite honestly, you have to prove to the insurance company that you have the type of construction that you can get a discount on the policy.
So not every condominium, I assume, in this area can get that discount, because all are not made to the newest codes, or even the codes that were changed back in 2004 after those hurricanes.
Well, yeah, actually, it was the code, the Florida Building Code, the major changes in 2002 was implemented in 2003. And almost every association in this area conformed to at least part of it. There are actually 9 questions in the windstorm mitigation inspection form, and most do not qualify for all of the discounts, but they'll qualify for some of the discounts. So it's not an all or nothing thing. You take pieces of it, so you might save 5% off your premium for this item, or 7% for this item. According to the Office of Insurance Regulation in Tallahassee, if you have all of the components on the list, the maximum availability, you can save up to 55% off the premium.
As you should. So if you meet all the credentials or some of the credentials and you get this discount, what does that mean? That you won't be as impacted by strong winds?
Yeah, exactly. For example, again, getting back to the larger tower associations that I always say along the beach, but they're also throughout Florida. We do a lot of them in the Orlando area. They're concrete roofs. They're flat roofs. The roofs are structurally attached. Most of them, because at some point or another, someone's had impact from hurricanes, some hurricane in Florida since 2004 when the statute really did change. They've got the roof coverings are Florida Building Code compliant. So they're going to have several discounts based on that. Everyone thinks that if you have a flat roof, you don't qualify for discounts. Well, that's not true. If you have a flat roof, we can show that it's structurally attached. You qualify for a very large discount.
That's what, because there's nothing to fly off of it.
Exactly.
Although those can be very dangerous in Florida because they also don't drain very well.
They don't.
Those that are right above the flat roof tend to have the most impact.
You're right, and one of the things that I've run into on my other job, my other hat as an adjuster, is if the air conditioning units on the roof are not properly attached on a flat roof, if they stick over the easement. They can go flying too, which is one of the things that we look for when we do our inspections, is to make sure that they're properly attached, properly strapped down. But getting back to the windstorm mitigation inspection in relation to the replacement evaluation, what we do is for our clients is when we every 3 years when we update the replacement cost valuation, we also update the windstorm mitigation. That way that there's never a lapse of discounts that they have. So we, although it's 3 years versus 5 years, if you skip one time, you lose a year worth of discounts.
Okay.
So we make sure everything is up to date, and then we do the maximum we can for our clients.
And how much is a windstorm mitigation?
Well, if we do it in conjunction with the replacement cost valuation, most we do as a courtesy. There's no additional charge for it.
Oh wow! So it's almost a no-brainer to do a replacement cost valuation with expert inspectors because you get your windstorm mitigation thrown in.
Right. If we just go out to the windstorm mitigation by itself for one building, it's usually $175. So it's an extra bonus.
Pays for itself.
Oh yeah.
Wow.
Yeah, but it's.
I don't have. I will tell you, I don't even know if many of my associations do that. I assume so because we work with a lot, and I'm sure when you go out, you tell them.
Yeah.
Do you also tell them this all when you're doing the reserve study? You remind them about the replace cost valuations and the windstorm mitigation? Yeah,
when Anastasia goes out and talks to the associations, and she definitely talks about the replace valuations. Replace valuations and reserve studies really do go hand in hand.
Right.
They're two totally different things. You can't use one without the other. One of the things I ran into several years ago that I will never forget was a CAM telling me that we don't need a replace valuation done because we just had the reserve study done. And it's like, I don't even understand that logic, but
so maybe we should go into that because people don't really understand the difference. The reserve study really just sort of gives a formula for how you fund to have a pool to do deferred maintenance and capital improvements for a condominium, whereby you would be updating, maintaining deferred maintenance or changing capital improvement or improving the condominium outside of a casualty event, or when there's not enough insurance money to pay for it. So it's a different pool of money for the same things, but you utilize that replacement cost valuation to tell you what amount of money you need to do the full replacement. And then the reserve study will basically put the formula together to get to that amount of money.
Yeah, well, and under a reserve study, you usually don't replace, you're not going to have to replace the entire building.
No,
but
you don't have to.
Right. But you want to make sure you have money set aside in your reserve account to put a new roof on because of wear and tear, not because of a catastrophic event.
Right.
You want to make sure you have enough money to patch cracks in the exterior walls. You want to make sure you have enough money to repair seawalls, which is a huge thing.
Paving, elevators. So
Right.
essentially Florida statutes has requirements as far as your reserve funding for a condominium. You must have reserve funds for your roof, your building envelope, painting of it, and the paving. You must have that, and also you must have categories for any building component that its replacement or deferred maintenance or capital improvement would exceed $10,000.
Right.
You must reserve fund for those, which is why you should get a reserve study, because I see a lot of management companies and also board members trying to put their own sort of reserve study together. That's not an expert putting it together, and it will ultimately always be incorrect.
Yeah, one of the most interesting things I've run into, actually a couple things in the last few weeks. One association was built in the early 80s. They've never had a reserve study done. They have a pooled reserve account.
Okay.
Now this is a large multi-floor tower association, okay?
Okay.
And they have 4 items in a spreadsheet, but not a reserve study done. And they've never increased the values of those since the developer put it together back in the early 80s. So they're still looking at 1980s cost for 2020 items, and it's crazy.
And they've probably, over the course since 1980, I'm certain have done some deferred maintenance and some capital improvements, and have taken money from those reserves and have still not done a reserve study or any kind of study to see how they should be funding those line items that are now all pulled together.
And you know, people also don't realize, you know, we're talking about statute. It is not in the Florida state statutes that you have to have a reserve study done.
That's correct.
Currently, you know, that's been up before several times over the last few years. Many states you do have to have a reserve study done. Georgia, Virginia, Alabama, but Florida has not passed that statute yet. However, it doesn't make any sense. It really doesn't. So you have this account of money that you think covers something, and you have no way of knowing if it's accurate or not, or how much, how to fund them. It's basically you're guessing at it.
Right.
But DPR has come out with some suggestions, I think about 2 or 3 years ago, that they strongly suggest that an association be at 70% or more funded,
right,
to be healthy. And if you don't have a reserve study done, it's hard to know what your percentages are.
Exactly, and the statute requires them to be fully funded, which is another interesting topic. Do we actually have any questions?
Keith wants to know who's going to dive into the bagels.
Come on down, Keith.
Anastasia has also mentioned that reserve studies are being asked for by mortgage companies for financing approval.
Okay.
And also that hurricane deductible allowances and hurricane cleanup deductibles are on the hot list for associations.
Well, I'm glad that she's feeling better. Yeah, and that's Anastasia's right. One of the things, getting back to the 70%, you know, what we say is if you were in school and you had 70%, you'd be passing, but you only have a C.
Barely passing.
Yeah. So, I would say that 70% funded is a definite minimum for associations to look at.
But what she said is interesting. So when, it's a hot market right now, lots of people want to sell their units. And what Anastasia's saying is that the people that are buying, everybody wants to borrow money right now. Why? Because interest rates are low. But these mortgage companies are saying, hey, if you're going to buy in this condo, we want to see their reserve study.
Yeah.
So all of a sudden, if your board members aren't doing, because the statute doesn't require it, but they're not getting that reserve study done, they're actually hurting your assets. Yeah. You need to make your associations get these reserve studies because they're not doing you any favors. They could basically render your unit unsellable because people can't borrow money. And nobody's going to go and get a private loan right now. I mean, the lenders are basically giving away money right now. How upset would you be if you were in a condominium, hot market, you had it as an investment property, you could make $100,000 more than you could 2 months ago, but guess what? You can't sell it because nobody will lend money to the buyer because there was not a reserve study done.
And we're running into that all the time. Every week we're hearing from CAMs that lenders on real estate transfers are wanting to see the reserve studies and to make sure they're properly funded. We've actually have seen some associations who are not properly funded, or do not have the documentation to provide them. The sales have fallen through entirely. No one is going to be able to sell it.
Now, this is an interesting concept that I've not run into. How much is a reserve study for your average sort of 100 to... We usually have under 150 units, at least in Ormond, even into New Smyrna, in Volusia County. What would happen? How much does one cost?
Yeah, it depends how many components they have,
but your average with a pool and 2 elevators.
A good average is in the $3,000 range.
$3,000 range. So what's interesting is, have you ever had an owner call you and say, listen, the association's not getting it together. I want to sell my unit. I will pay you to do the reserve study. You do the reserve study. They give it to their lender. They can get their unit sold. Sure, the association can rely on it. Maybe then I get hired to sue the association to reimburse them. But at the end of the day, there is an ability for, would you do that for an owner? Does it always have to be the board that signs the contract with you, and why? As long as the association gives you access, and I don't know that they could deny you access, because guess what? Every common element is an appurtenant to the owner. The owner can take you around.
We've not had that happen.
I've never had that happen.
We have had owners contact us and ask us to give us a quote for the association. For reserve studies because they can't sell their units because there's not an active one. But it has ended up being the association at that point that hires us. So we've never actually had a unit owner want to hire us instead of the association.
I mean, it's interesting that mortgage lenders are even requiring it, because just because an association has a reserve study does not mean that they're going to fund that way. Mm-hmm. What really mortgage lenders should be asking for is their budget that goes in conjunction with the reserve study, because a reserve study is just that. It's sort of your formula, your opinion on a piece of paper. And like Anastasia always says, you're not the CAMs, you're not the board, you're not their accountant, bookkeeper. You don't create the budget that goes along with the reserve study. That's all the board's responsibility. So they could have a reserve study, basically throw it away, but is that all the lenders are asking for, is just the reserve study?
They are. They're looking for the reserve study and the reserve balances to make sure the money is there.
But they are asking for the reserve balance.
Yeah, they're looking to make sure the money is there, and so basically how much, if they're following the percentages on the study. So I mean, they are looking for that. And the reason for it is very simple. They want to make sure that their investment, and when the bank lends the money, they are investing in that association just as much as the buyer is, the owner of the association.
To make sure that the asset is going to be maintained properly.
Exactly.
And has a pool of money there. So what's interesting is, how many associations do we work with where the owners consistently vote to underfund or waive the funding of reserves? Are they doing any favors for the condominium?
No, and then they're cutting their own throats.
Exactly.
Anastasia likes to use the term kicking the can down the road, and a lot of people think it that way. It's like, well, I'm not going to own here for the many more years, and so I don't want to come out of my pocket. We'll wait for the next owner to worry about it.
Right.
So what would have happened if the owner 10 years before them had that same mentality? Then they'd be having to live with it. I mean, it's you can't kick the can for continuously.
Which is why this forum again is very important, because it's also for members, people that are interested in buying condominiums and homeowners associations, because what happens a lot is realtors aren't quite as knowledgeable and looking at what they need to look for to buy into condominiums. Owners or buyers certainly are not. And it's only been a trend that has started as of late, and I don't think people really dive into it enough to determine how viable your condominium really is and what to really look at in a budget.
Well, it's funny you're talking about realtors. Realtors are actually becoming more knowledgeable than they used to be. I know actually realtors around the Daytona Beach area where we're located at, that there are certain associations they will not recommend to their clients just because they know that the finances are not viable,
Right.
and that they won't have a good resale value. So I mean, it's becoming more and more of an issue, not just for the mortgage companies who are looking at the financials to whether or not they're going to put a mortgage on the property, but even for the realtors, they know which are the good associations to refer to their clients.
Any other questions? None. Okay. Well, anything else that you want to discuss, Dave?
Now, I think it basically it covers what we do. Again, currently, like we said earlier, the reserve studies are not required, but the board members do have fiduciary responsibility to make sure that the assets of the association are protected. And then the smart way to do that is to have the replace valuation done on a regular basis, and have a reserve study done to make sure that they are properly funded. Because it is their responsibilities to make sure that they're protecting the assets of the association, which is a corporation.
And should read the reserve study, make sure it's part of your books and records. I could open up a can of worms with regards to the legal issues, but my recommendation is we're going into budget season. Come to Kistemaker Business Law Group or go to whoever your lawyer is, but make sure that you discuss budgeting requirements regarding your reserve with your lawyers. Have discussion with your lawyers with regards to maintenance, repair, and replacement, what the cause is, who's financially responsible, how the process should be dealt with regards to how you maintain, repair, replace, who you hire, contracts you enter into. There are pitfalls with everything. This is, board members, this is not your money. You have somebody else's money. You're making decisions for oftentimes a multi-million-dollar business. Be very careful because you can get sued for breach of fiduciary duty. And this is an important time period because we're in hurricane season, lots of rains, lots of insurance renewals. We're going into election season and budget season. Your budget is your most important item.
Right.
And, work with your accountant, work with your evaluation specialist, work with your lawyers because you need to get that budget correctly. How many times do we see associations where they waive the reserves, but they never get the vote of the owner? The requirement of the board and the association is to fully fund their reserves unless they get a vote of the owners at a members meeting to waive or underfund the reserves.
Mm-hmm.
So, and anybody that came today, we want suggestions of what to discuss at BS and Bagels because I want this to be interactive. Me and Dave know what we're talking about. We hope to educate everybody, but it is helpful for it to be interactive and really touch on the questions.
Yeah.
We don't know what we don't know.
Yeah,
unless we get questions or what we can help people with.
Yeah, we can sit here and talk for hours and hours, and we have before,
Right.
About this, but unless we have specific feedback from you, we don't know what topics that need to be covered.
How did they get in touch with you?
Expert inspectors, we're located, our main office is located in Port Orange. We are also have satellite offices in Venice and in West Palm Beach. But it's telephone number is 386-677-8886. Let's try that again without stuttering. Not enough coffee. 386-677-8886. If you have questions about reserve studies, ask for Anastasia. For replacement valuations or windstorm mitigations, ask for Dave. We'd be happy to answer anything we have. You're under no obligation to retain us. We're always happy to answer questions from for any CAMs or board members that we can. We're happy to help.
And the name of my firm, of which I'm the managing partner, is Kistemaker Business Law Group. I'm Erum Kistemaker. If you also have any questions, please contact us. Our phone number is 386-310-7997. Our website is DaytonaBusinessLawyers.com. We also have our Facebook, like us on Facebook. We have an Instagram, like us on Instagram. All of our educational seminars and hot topics, blogs are all on our website, our social media. You can also email us. Our emails are on the website where we have other staff members to assist. I also have other lawyers to help assist me. And we do primarily specialize in community association law. That's 80 to 85% of our practice. And we do everything from start to finish, collections, covenant enforcement, some of the easier things to very complex litigation for community associations. We'd love to help you. Been in the community for a very, very long time, and we also hope to continue to educate the community, because with education, I think there's going to be less disputes. Mm-hmm. If the members are educated, if the board members are educated, if the CAMs are educated, if you have the resources to hire the best experts, and people that we're going to have come to BS and Bagels are going to be the experts that I believe are the best in the industry. So please utilize this forum for those resources. I also want to mention that we're going to be doing a live webinar for covenant enforcements and how you suspend and fine owners and you enforce your covenants in your declaration. That's on October 2nd from 9 a.m. to 11 a.m. And we're going to be sending out information with regards to that. BS and Bagels is going to be once a month. Again, I hope people give us suggestions, or else we'll come up with something else that we want to BS about.
Yeah.
Tell us other experts you'd like to hear from, and thank you for joining us.
Thank you so much.